Hello and welcome to The Global View, the show where we look at ways for investors to make money beyond the ASX listed universe. I'm your host, Juliet Sarli. Well, Wall Street started the trading week on a bit of a mixed footing. The Dow Jones index was higher, boosted by healthcare and industrials. However, the S&P 500 and Nasdaq indices closed lower, dragged down by declines in mega-cap tech stocks and as investors monitored developments in the US-Iran negotiations. 7 of the 11 major S&P sectors closed higher, led by real estate and energy stocks. Shares of SpaceX fell more than 16%, marking their steepest one-day decline since its debut and weighing heavily on the Nasdaq. The drop wiped $600 billion in market value from the Elon Musk-led company and came after it said it was selling investment-grade bonds to raise capital for its AI ambitions. Now, despite the sell-off, the stock remains above its IPO price of $135 a share. Analysts have been questioning Wall Street's lofty spending on infrastructure expansions, with other tech stocks like Alphabet, Meta, Amazon and Microsoft also coming under pressure. Shares of stock photo company Getty Images Holdings soared as much as 145% before closing higher by more than 84% after announcing a licensing deal with OpenAI. And Micron Technology was also higher after announcing a strategic agreement with Anthropic to scale next-generation AI infrastructure. Chevron, meanwhile, signed a 20-year agreement with Microsoft to supply natural gas-fired power to a proposed data center in West Texas, a facility that could rank among the largest in the United States. And among other movers, Abigy Therapeutics jumped close to 50% after AbbVie said it would acquire the biotech company for $10.9 billion in cash. Well, in the United Kingdom, Prime Minister Keir Starmer announced his resignation, setting the stage for an orderly handover to frontrunner Andy Burnham, who could become Britain's 7th leader in 10 years as early as next month. In an emotional address, Starmer said he'd reflected on the concerns within the governing Labor Party and recognised that he was no longer the leader to take the party into the national election scheduled for 2029. Elsewhere, the United States has waived sanctions on Iran for 60 days after the first talks under a peace deal, while officials reported calm in Lebanon after fighting that had prompted Iran to declare the Strait of Hormuz closed. US Vice President J.D. Vance said his talks with Iranian officials in Switzerland had established a solid foundation for a final peace agreement, although Tehran denied that discussions on its nuclear program had begun. US Treasury yields climbed, with the interest rate sensitive 2-year touching a 16-month high as traders brace for a more hawkish Fed. The yield on the benchmark 10-year note increased by 5.8 basis points to 4.5%. Having a look at currencies, particularly the pound, after Prime Minister Keir Starmer announced his resignation. The British pound is worth $1.32.5 against the greenback. Well, oil prices settled more than 3% lower as supply concerns eased after US Vice President Vance said progress had been made in talks with Iran and that the Strait of Hormuz was open. Brent crude down more than 3% to just under $78 a barrel. Spot gold rose by around 0.75% and is just under $4,200 an ounce. And Bitcoin rose modestly. It's holding above 60 or just under now $64,000 a coin. So we'll talk a little bit more about what happened on the overnight session. I spoke earlier with Chris Weston from Pepperstone and started by asking him his thoughts on that retracement of SpaceX back down to earth.
The IPO price of $135. So, it's come off 3 days in a row now. I think we fell 16% on the session there. So, I think a lot of people sort of got into 225 saying this is crazy now and, let's take a bit off the table. And, the price has dropped about 33% from those highs now. So, it'll be interesting if we get down to the IPO price. Do we find people supporting into those levels? But I think there's still a lot of people who are looking for a big run up. I mean, the options market's now trading, price discovery is becoming a lot more real. And liquidity is still very good in the stock. So we're watching, I guess, until it does get the inclusion into the Nasdaq. That could be a supportive situation. We've still got a little bit of time until that takes place, number of days to take. But we could see some people looking to front run potential flows into the queues and some of the passive funds there that will be tracking it. So look, it's come off nicely from the highs. Does that give you an entry point for a longer run in? For me personally, I think this is one that you sort of get a little bit of money put from the kids and sort of accumulate for them over the long period of time, because this could be one that could be up 1,000% over the next 5 years, or it could be down another 50%. So yeah, you've got to have the risk tolerance for it. But if it works, if they can execute, and that will rely on shareholder capital to get those revenues. If they can get that revenue growth that's expected, then this can do very well. But obviously, it comes with a lot of execution risk, and shareholders are going to be expected to tap it up and support the capital raisings pretty sharply on that one.
Absolutely. All right. Well, overnight, as we mentioned, a bit of a dip, particularly from some of these AI tech stocks, but we locally are expecting a positive session. We do have oil prices lower though, so still, the precarious peace deal, I guess, between the US and Iran.
Yeah, I just want to touch on that point there, which you talked about the AI stocks. I think you are seeing a bit of rotation in the States, and we're not going to necessarily see that here in the ASX 200. But some of the big generals in the Mag 7 space, Microsoft, Google, and Amazon, those two specifically have been down pretty hard. There does seem to be a bit of rotation into different parts of in AI. So memory is working really well. So you're getting people moving out of the hyperscalers, the customers, should we say, into the first derivatives, which is memory. And we've got Micron coming out of earnings after market tomorrow, and the market's expecting massive moves there. So everyone loves memory because of the shortages and the pricing power that the select group of stocks do have. So that's an interesting one. We won't see that here today. But to touch on your question about crude, we did see a bit of a move higher in the early stages of the session. Obviously, people focused on the differences in the memorandum of understanding between the US and Iran. But the sellers whacked that one back straight down, and we're testing last week's lows now. So there does seem to be a focus on the Straits of Hormuz and the cargo going through there. I think yesterday we did see 24 vessels going east to west, west to east, which is constructive. It's certainly better than where we were, 0 to 3 vessels or so. So it's starting to trickle through now, and I think the market has sort of sensed that coming through, and obviously the US as well are talking about allowing Iran to sell barrels into the market as well in the secondary market. So a negative there. But I think it's coming to very, very interesting levels. We saw both Brent and WTI front month futures gap up from the close on the 27th of February up into the 2nd of March. And we're coming into that gap zone there. So the world is a very different place from that point. There's still mines that are reported that need to be cleared from the Strait. A lot of the infrastructure and output is still yet to come on board. So, that does suggest if we get into a little bit more lower levels in Brent futures, into those gap levels there, that we will see some support. I think that's probably going to be a level that people will look to buy into. But oil prices are a little bit lower. It's lowered inflation expectations, but certainly energy stocks can be looking at that one very closely.
Well, on those inflation expectations, obviously a big week for inflation data, and really just pointing to what that means for the Fed in July.
Yeah, well, we've got inflation here in Australia, which could be pretty meaningful tomorrow. But I think one of the big talking points now is that situation of whether the Fed will look to raise rates in July, and it's just come out of nowhere, really. A few weeks ago we were talking about an extent of potential rate cuts over the course of this year, and now it's not just how many hikes the Fed have got in this cycle, but the start date. The market's pricing July, the July Fed meeting at a 40% probability, which is meaningful, and it suggests it's a live meeting. Now, of course, that's on the back of the Fed meeting that we saw, where 9 out of 18 members were calling for rate hikes this year, 6 of those by 50 basis points or more. So there is a skew there because of inflation on their economic projections is too high, and it's been high since 2023. I think it's been above the Fed's target, so 5.5 years or so. But this week the core PCE measure comes out, and the market's expecting that to tick up on the core number to 3.4% year on year. Now, what's interesting now is that we do get Kevin Walsh testifying to the House panel on the 14th of July. It's the big date for everyone to pencil into their diaries, and for that meeting, then for that testimony, he's going to have the core PCE numbers. He's going to have the June payrolls numbers. He's also going to have the June CPI numbers. So the market will know whether he could be skewed towards leaning on a Fed hike in July, or whether it will be downplayed depending on the outcome of those data, in which case the pricing will come out. But the market's saying at the moment, some chance that we're going to get a rate hike in July. Probably seems a bit early. If they don't go, then the next meeting in September is almost a lock in the market's eyes. So that's very supportive of the US dollar. We've seen the US dollar outperform lately. It hasn't really weighed on gold, but we have seen 10-year real rates are moving up to the highest levels for a while. So, yeah, that's a meaningful tightening of financial conditions, which may be starting to weigh on equities. But, yeah, I mean, I think it's a really big talking point. The Fed have gone from this idea of, how many rate cuts to just suddenly like, how many rate hikes are we going to see? And when's the start date? Could it be as soon as July? That's a big development for markets.
Let's talk about currencies, Chris. Keir Starmer resigning overnight. So a lot of focus on sterling. This is really increasingly important for sterling traders, isn't it? Because so much political instability. What are we looking at? The seventh Prime Minister in 10 years.
Yeah, I mean, it makes France look pretty chaotic in some capacities there as well. But no, I mean, Keir Starmer stepping down won't surprise. I think the good thing for the British public anyway is that it's a clean exit. There was talk that there could be a leadership battle between Starmer, Andy Burnham, obviously who won the Macclesfield by-election by some way last week, and potentially even Wes Streeting as well could come into the mix, and there could be some sort of live debates on TV, and then the Labour Party would have to poll. So that, what we've seen him stepping down avoids a fairly messy situation. And Wes Streeting has said he's not going to apply for leadership. So it does feel like Andy Burnham's got this in the bag now, and he'll get his coronation in July ahead of the Labour Party conference in September. Now, I think if we'd had this conversation late last year, I would have said that this would have caused significant volatility in the pound, because Andy Burnham had come out at that time and said that he wasn't going to be a slave to the UK bond market, to the gilt bond market, which would have been all over the place given what we saw back in 2022 with Kwasi Kwarteng's ridiculous budget, which caused massive volatility in the gilt market. But he has changed his tune in the last couple of weeks and said that he will adhere to the fiscal rules. That gives us a clean pair of hands, a safe pair of hands, that he's not going to do anything silly on the fiscal side that's going to cause an unfunded budget to come through. But also then you're going to have to look at who's the chancellor for his new government. There's lots of talk that's going to be Ed Miliband as well. But look, I think this is a clean option for what we could see. Burnham's going to get the gig as Labour leader, and he's said that he's very much in the fiscal line. So this has not been a huge volatility event. In fact, in some ways, of the various scenarios this could have gone down, it's probably the cleanest and the most pure way of getting to this point. So it's not going to surprise, but cable's had a little bit of a rally, nothing too sinister. Sterling looks quite supportive against the euro here.
And Chris, what does all this mean for our market? We're expecting a slightly firmer start.
We are, yeah. I mean, we've got the market opening a little bit hotter, about 0.3% hotter today. We'll have to see what banks do, material stocks. There's not a huge amount of major catalyst today, and we've got the ASX just looks really comfortable where it is at the moment. It's a range trader's paradise, really. I mean, we've got 8,600 to the downside, looks like good support, and then your market's happy to fade it at 9,000. So unlike we've seen things like the Nikkei, the Euro stocks, the Nasdaq, which have had a really strong trend recently and trading at all-time highs, we're just in this kind of zone where the market's just sort of meandering sideways and caught in a range. And I think that's where it looks happy and very comfortable, and you're sort of just rotating within the different sectors there at the moment. So we've got yield, which is good, so you can get the income. Carry's very much in vogue across the board, so that's good for our market. Stocks are good, but I think we're lacking a big catalyst for a strong trend, and right now the market looks pretty comfortable in that range.
Pretty comfortable, says Westy. All right, let's get a final check on where the local market is expected to open. We are expecting a positive day's trade, and the open, of course, is just moments away.